Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property. Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, welcome back to the channel. So there's actually been a lot of interest coming recently for a residential home. People are really wanting to buy a home, but they're just unable to afford it. And so they're looking for residential home loans within their area. So I do want to go over a few loan options for you that are going to be the best for you. So in my previous video, we went over down payment assistance programs that offer 5% for first-time home buyers and 2.5% for reoccurring home buyers. Now, another thing that a lot of people don't know is that, yes, people want you to buy duplexes because you can rent out one side and live in the other. That's going to offset your income. And if you're buying it on your sole income, that is great, because what that's going to allow you to do is be able to pay the entire mortgage yourself, and having that roommate or having that other side rented out is just going to be icing on the cake. And that is personally why I never invested with anyone else. I invested in every single property that I owned by myself, because one, I don't want someone telling me what to do with my real estate. I don't want someone telling me we should sell, or even suggesting that the price is getting real high, or that we have 100,000 in equity just for my knowledge. I don't want to know that, because it lets me know that you probably want to do something with that. And I am a buy and hold investor, not only in the stock market, but in the real estate market. But back to the loans, okay? I'm just basically telling you to buy yourself. Now, if you are married and you guys are going in this together financially and with the workload that it requires, then go ahead and do that together. Obviously, you're going to do that regardless, and you already split all financial responsibilities. So, you know, if you didn't get that prenup, that's on you. Yeah, if you're married, jointly, you know, talk to each other and ensure that you're both ready for the financial responsibility of owning a home, especially a residential home. And here's some good news for you guys, is that the home loans are going to be the cheapest ones to get. It's going to be cheaper than getting a duplex. It's going to be cheaper than getting an investment property, because the interest rates on those are going to be a lot better. Now, there's something that you have to be aware of, right? In December, in September, in November, especially in places like the Midwest that have snow, right? Like New York, New Jersey, Ohio, Virginia, what other places? Pennsylvania. Places like those that have a lot of snow, Colorado, you're going to see prices drop in those months, in those winter months. And those are going to be typically the cheapest times to buy. The problem with that is that if you're looking for your forever home, if you're looking for a beauty amongst beauties, that is not typically the time where you're going to have the majority of homes available to you. No, the majority of homes available to you will start to appear in April, May, and June, which means it's also going to be the most expensive time to buy, because the interest rates are going to be highest around those times, because they know a lot of people are going to want to be buying homes, and a lot of people are going on vacations. A lot of people are selling their home. Their children are out of school. They're ready to pick everything up and relocate. And so all of those better homes, I have to just say it like that, the best homes that are available, the homes that make the most sense, the homes that are your dream to move into, is going to be available April, May, and June. But now you're going to be in bidding wars. You're going to be fighting for these properties. You're going to be having to go up in price for what you are looking for. So if you're looking for a $400,000 home, you might pay 405 or 415. I'm not expecting it to be 20,000 above asking price anymore. But I would say shoot for a home that is about $20,000 below what you can afford. And if you do get into a bidding war, you can go up $20,000. That is how you should look at it. Don't look to spend the max amount that you possibly can. If your max is $300,000 and you're spending $300,000, there is a possibility that you can be beat out. But you can try maybe in April to just pay the flat rate as is, $300K for a $300K home, and see if nobody outbids you for it. But if you can't get what you want, you're going to have to go down in house price and housing value, and it's going to be a sad situation because you've been looking at all these more expensive homes that you're being outbid for, and now you're not going to want the home that's $20,000 less, right? And always try and find the worst home in the best neighborhood, because you can always improve on the home, but you cannot single-handedly improve your neighborhood unless you're a multimillionaire or billionaire investor, right? Then you can improve any neighborhood you so choose. Also look at government programs and see what they're doing in those neighborhoods, if anything, right? There are definitely neighborhoods in every state that are going to be revitalized through your city taxes. And you want to be a part of that because you are paying taxes in those cities. You want to make sure that your neighborhood is being positively impacted by that money, by those dollars. Another thing that I want to say, once again, I believe I said this already, but interest rates are higher on investment properties. Interest rates are higher on duplexes. Interest rates are just simply higher on multifamily. And so if you're looking for a single family residence, those loans are going to be cheaper. What you want to do is start to pay down debt. That's another topic that we're going to address because people are also looking at a lot of debt relief right now. Interest rates are high. People are not getting better wages. Rent prices are going up. Food costs is going up. People are looking to really start to alleviate some of that burden of their financial burden so that maybe they're putting themselves in a position to where they can buy a property, to where they can buy a home, right? And so good news there. For your first home, yes, you can get that down payment assistance at a fixed rate. Is the interest rate going to be a little bit higher? Yes, but it's going to help you with that down payment, especially if you have trouble saving money. Now, another thing I want to say, if you have trouble saving money, if you cannot save $10,000, you have no business buying a home. I'm not saying that because, $10,000 is an easy feat to accomplish. In fact, I would say $10,000, especially your first $10,000, is a hard thing to accomplish. And so because it's so hard to accomplish, I want you to know that if you cannot save $10,000, you are not ready to own a home because you are not ready for life expenses. You are not ready for maintenance. You are not ready for the upkeep. You're not ready for when your AC goes out. You're not ready for when your roof starts to leak. You're not ready for those things. I have some vinyl, I forget what it's called, some towel in my kitchen that is coming off, maybe due to sediment, maybe due to, just settling down all the water that builds up in the kitchen and everything else. It's starting to come off. I had to order a few things so that I can, glue that back together and make it look nice again. And so, those are little things. That was a small repair, probably only going to cost me about $20. But at the end of the day, right, this is things that I have to budget for. If you don't got $20 to fix it, obviously that's very cosmetic. But if you don't got $20 to fix it, then, you're going to be walking around your home understanding with the knowledge that, hey, I got things in my house that are breaking and falling apart. That's not okay, right? And so you also have to understand that there is more to home ownership than just paying your monthly payments on that mortgage. No, there's a lot more that goes into home ownership. And so to be ready for that, you need to be able to at least save $10,000. I believe that is the bare minimum, and that should not be included with your emergency fund, right? Now, I will, just out of all transparency, when I bought my first home, I depleted my entire emergency fund. When I bought my second home, I depleted my entire emergency fund. All right? Would I do that again? Knowing me, it is very possible that when I buy my third property, I'd probably do the same thing, because what I love is the cheapest payment possible on a home. And the only way to get that is to spend all your money. Is it the smartest thing to do? No. Does it feel smart right now? Absolutely, because I've already saved up tens of thousands of dollars. I already have a new fully funded emergency fund, and I have the cheapest rate that I could have possibly gotten. I have the cheapest payment that I could have possibly gotten, because I put all of my eggs in that basket at that time. And so it just allowed me to live more financially free now, because I put all my eggs there. But I do want to let you know that that was a huge risk that I took twice. You should not take that risk 10 times and expect everything to go well 10 times. That's not going to happen, right? It's just a thing of probabilities. It worked for me 2 times and I did not get burned. That does not mean I should keep doing it and expect to not get burned, right? And so that's what I really mean by that. I should at least have two months. I'm telling myself this. Will I do it? We will. It's to be determined. But we should at least keep 2 months of an emergency fund. Most people would say 3 or 6, but I really want you to get the smallest payment possible while, buying that first home. So yeah, I mean, ideally, following my own advice, I should have at least 2 months of expenses saved up. And 2 months of expenses is a lot of money for me now, guys, with 2 properties, with cars, with utilities, with, just life in general, with with relationships. It's a lot to keep up with. That's tens of, I guess let's say I spend maybe $4,500 a month. That's not the wildest thing, especially for a single man, right? So what is that, like $9,000 for a 2-month emergency fund? Yeah, so, maybe you boost that to $14,000 in the emergency fund when you buy another property, just keeping $14,000 on the sideline. So again, guys, if you can't at least save 10 grand, one, you won't even be able to afford a house without using the down payment assistance program. And then you're still going to have closing costs, which can range anywhere from $2,000 to maybe even $15,000, depending on how big a house you want, depending on how much money you're looking to put into a home. And so, focus on getting out of debt so that you have a better debt to income ratio. Focus on down payment assistance programs. Focus on saving money. And if you have debt that you need to get rid of, focus on some debt consolidation. Focus on building a budget. Focus on delaying gratification, not spending money, and truly honing in on being the best version of yourself, saving money for a rainy day, and delaying those trips to Sephora, delaying those trips to restaurants, delaying those trips out to party, delaying those impulsive buys on Amazon, Instagram, and Temu, and whatever other site or app that you go to. In fact, delete all of them, sign out of all of them, unsubscribe from all of them, so that you can get ready to be the best version of yourself. Get ready, lock in 18 months. Say it with me, 18 months. And you're going to have all the opportunity at your disposal to do whatever you want with that. So with that being said, if you do what I just said to do, you will be golden. 18 months from now, your life will be completely changed. Whether it's getting out of credit card debt or buying your first home, it is absolutely possible. I don't care where you live, with the exception of California and some parts of New York. So with that being said, if you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.